I'm going to turn it over to Julius. I know he's got a bunch to go over, but give us some RRG 101, Julius.
Hey, Tom. Yeah. Okay, I'm multitasking here right now, but I'll make that work. Okay. For those of you who have never seen an RRG before, these are the charts. Okay. I hope you can see my screen now. What you're looking at is an RRG of the 10 S&P 500 sector ETFs. Basically, this is showing you the relative movement of all sectors inside the S&P 500 in one screen. And there is immediately the biggest advantage of using RRGs because it gives you the big picture in one picture. To make very, very sure, this is all based on relative strength. So it is very well possible that sectors or stocks move into the leading quadrant. Why they are there, I'll get to that a little bit later on, while they are going down. So be aware of the fact that this looks at relative performance against, in this case, the S&P 500. So here, XLE Energy is now the outperforming sector inside the S&P 500. It's beating the S&P 500, but it would also beat the S&P 500 if the S&P 500 was going down and the energy sector was going down, but the energy sector was going down less fast than the S&P 500. That's the relative performance that we're looking at. To get you up to speed, we need to go over the basics, and the basics is relative strength. So here I have my chart list, which has all S&P sector ETFs listed. And the one thing that I want to point out to you is the behavior of the relative strength line. All these charts in this list have the relative strength line, just as Tom just showed you when he was doing his comparisons with treasuries and banks, etc. And what you see below it are the two RRG lines. It's the RS ratio and the RS momentum line. The RS ratio is a measure that calculates trends in a universe and compares them to a benchmark and puts them all on the same footing. And that's very important because all these values across the universes are comparable. And that's the big, big difference with the raw relative strength line. I call this a raw relative strength line. That's straightforward XLB divided by SPY. Now, I looked at two examples that I wanted to share with you, and that's XLV and XLK. Look at XLK. That's technology. It's a very strong sector. Look at that trend in relative strength. That's still going up very, very nicely. Now note this reading here. That's 0.254. Now, if we scroll to XLV here, that is healthcare, and you see that the relative trend here is clearly down, but the numerical value is 0.3. So it's higher than for XLK, but the trend is going down. So this means that I cannot use that numerical value that comes out of that ratio chart. So I need to rely on my visual inspection of that ratio chart to make up my mind. I could do that. That is possible. I can browse through a number of those charts, and you just saw Tom, pulling up a couple of different relative strength charts together with the correlation. But he had to flip from chart to chart and every time create that new relative line. And that's one of the problems that you have with relative strength, is that the numbers are not comparable. And if you have, in this case, for example, 10 gig sectors, or if you go to level 2, 24 gig sectors, you would have to look at 10 by 10 is 100 charts, because there's 10 sectors, so you've got 10 by 10 combinations, makes 100. Now, clearly, if I've looked at I cannot look at financials against financials, because that's one. So the number of elements in the universe, in this case 10, I can subtract from 100. leaves me with 90 possible choices. However, when I've looked at, let's say, financials against technology, I've already seen technology against financials because it's the reverse. So that 90 combinations, I can divide by 2, but it still leaves me with 45 possible combinations. And I'd have to flip through 45 of those relative strength charts to figure out what it is, because I can look at financials against SPY, and I can look at all the individual sectors against SPY. But if I need to make up my mind what's the best one, I need to compare them all against each other and not only against SPY, because I can say, healthcare is doing well, financials is doing well, and technology is doing well, but which one of those 3 is doing the best, or which one do I want to look at? And then I have to start comparing these 3 against each other, which leads to the 45 charts. If you go one level deeper to the industry groups, it gets even worse, because you've got 24 industry groups, and that brings me to 276 possible combinations. Now that's, even if you want to do the work and flip through all these charts, it'll be very hard in your head to put that all together and create a big picture in your head. And that's how the RRG lines and the RRG chart can help you. This is a basic canvas of a scatter plot, or the basis for an RRG. And on the horizontal axis, we've got the RS ratio. That's the red line that you just saw in those charts. And on the vertical axis, we've got the JDK RS momentum line. That's the green line that you saw on those charts. If we plot every sector in this case on this plot based on those RRG values, we will find the sectors that are above 100 on the RS ratio and above 100 on the momentum line in the top right-hand leading quadrant. This means that the trend is up, because what the RS ratio line, the red line, is above 100. And that trend is still being pushed higher by strong momentum, because the momentum line is still above 100. Now, the first thing that will happen is that momentum will start to level off. Momentum is a leading indicator. Rate of change, basically, is a leading indicator. So what we're looking at is the rate of change of that trend. And if that starts to deteriorate, it pushes that sector into the weakening quadrant. In that case, the red RS ratio line is still above 100, so the trend is still up, but the momentum is leveling off and going down, so it's losing momentum. If that loss of momentum continues and it pushes the red line below 100, then on the RRG, we will move into the lagging quadrant. And this is a situation where we have a sector that is in a relative downtrend, and that downtrend is still being pushed lower by weak momentum. Again, after a while, momentum will be the first thing to change, and in this case, it's going to change upward, and it will move above 100. And in that case, the sector will go into the improving quadrant, which means that the green momentum line is above 100, while the red ratio line is still below it. And if that rotation, if that strength continues, then the sector will rotate back into the leading quadrant, and we're back at where we started. And this pattern happens all the time, and it happens to rotate in a clockwise fashion. And that's what you will see on an RRG. Because this was the RRG as I had it, because there's a bit of a story here. You can probably watch it back on some old webinar, how I got to this, how the idea was born. But this was the first one that I looked at, and it showed you the little dots at a specific point in time. And you can see here on StockCharts, you can see here that it's the week of May 22. We're looking at a weekly RRG, by the way. It helps you already to show you that XLE right now is very strong and XLP is very weak. But we're technicians. We like to see some sort of historical movement. And that's where the tail comes in. And the tail you can set here. You can add historical data points to that chart. And here you got like 3 weeks. And now you can see the movement of those sectors. And the longer you make that tail, the better you can see that clockwise rotation. Now, obviously, when you do it like this, and luckily enough, this one has only 10 ticker symbols on it, but you can already see that it's becoming a little bit of a spaghetti. But the guys at StockCharts have done an amazing job, but because they have added an animation button. And if we max it here and we animate it, you can actually see the sectors scroll through time. And here is where the value is, because this picture gives you the movement, the relative movement of all those sectors through time. Not only the 4 weeks that the tail shows you, but you can also either drag the sectors or you can press the animate button. I'd advise you, or encourage you, I should say, to play with the buttons and the controls that you have here. The zoom button zooms in, and you can then drag and see more clearly where things are. And if you want to have a bigger picture, you can zoom out and make it, wherever you want it. If you max it, it means that all the symbols and all the tails will be on the screen during the rotation that is loaded. If I fit it, it will fit it on a specific date. If I scroll it right now, some things will scroll off the chart, but you will still see them. You will still see that there is one somewhere down here, and I can drag it up and it will be there. So fitting fits it at a specific date. Maxing will maximize it, keep everything on the plot for the whole period. And if you center it, it will always keep the center of the chart in the middle. And while you scroll through time, now please watch the scale on the axis. The scale on the axis will be adjusted to keep everything on the plot. This is a pre-populated group. We have a number of pre-populated groups here. If you look at it, you got major market index, you got US industry index. This is probably the one that is most used. Sector ETFs, that's the one that we're looking at right now. But last week ago, I have added a breakdown for all the individual stocks of those sectors. So if you want to look at, let's say, the staple sector, you just click on XLP and it will be loaded with up to 50 stocks, and they're weighted on their market capitalization. So if there are more than 50 stocks in a sector, this group will hold the top 50 based on market capitalization. And it will be compared, in this case, against the XLB sector index. Again, you can play around with it and you can, pick your stocks and do your stuff. One of the things that I really like to do is select one of the lines in the table below. By the way, the percentage change that you will see is based on the number of weeks. So this percentage change is the percentage change of this particular stock over the last 5 weeks. If I change that to, let's say, 8 weeks, you will see that the percentage change changes. And if I do it 1, this is the week to date change. Let's put it back to, I think I have like 4, maybe, I don't know. But what happens if you select the line in the table, it will highlight the tail on the chart, which still gives you the big picture because, they're all still visible. But this one is highlighted. Now, if you press Control and then press the down arrow key on your keyboard, you can walk through all these individual stocks and, make up your mind and, say, hey, Coca-Cola, that's pretty nice. By the way, that was my pick yesterday in the Monday setups. And somebody in the chat box, I remember, said, boy, why are you picking Coca-Cola? Because it's a weak sector. He's right. XLP is the weakest sector in the universe. The reason why I picked Coca-Cola is because it came out of a scan that I will talk about later. But you can see here that Coca-Cola is outperforming XLP, and it's actually looking pretty cool against the S&P 500 as well. So that was the reason why I picked Coca-Cola. So you can browse through and make up your mind. We're 4 minutes before this segment ends, and I got into trouble yesterday again. I'm gonna use your input because this is the RRG that holds all the ticker symbols, as far as I could grab them from the chat box, on the 10 and 10. So let's just do what I just showed you and highlight the first one, and I'll very quickly talk you through why I think something is interesting and maybe something is less interesting. Now here, NOG, a very strong stock, undoubtedly, but it is in a massive relative uptrend against the S&P for a long time already, and it's losing relative momentum. So I am pretty sure that this is a very strong stock, but it's losing relative momentum and it's had a big run. So it's probably very late to get in. So I'm going to skip this one for 10 and 10 because I do think it's too much risk right now. This one is interesting, RRC. By the way, I switched to daily RRG. So it's daily observations. We were looking at a weekly RRG earlier on. We're now looking at a daily. There is a big article in the chart school pointing out the differences between daily and weekly RRGs, but it's basically the same difference as between a weekly and a daily bar chart. That's the short version of explaining it to you. So RRC is something that I'd like to look at. COPX looks nice. Yeah, it's close to the benchmark, but you see that it made a nice rotation and it's now pushing into leading. So I'd like to take a look at that one. Disney, very close to the benchmark, improving. If I'm not coming up to 9 stocks, then maybe. FCX in improving, gaining on both axes. That's interesting. I'd like to see that one. This one is already losing it, so probably not. Not really nice. It's doing nothing. Very short. Short tails are kind of, directionless. They're not very interesting. They're stable, but in this case, they're stable on the left-hand side. CZZ could be an interesting one. Make a little note of that one, and then I'll narrow it down later on. IBM, same. Could be interesting. Tail is not too long yet. All these little observations, all these little white dots are daily observations. So it's they're still close together, but it is improving. So that's good. Amgen looks nice. That's about to cross over. So Amgen is definitely something that you might want to look at. This one is not yet. It's coming out of leading into weakening. It's losing momentum. Could be a very strong stock, but not for the time being, not for a trade, not for a 10 and 10 trade. Same for QRVO, same for RH. This one could be interesting because it's picking up momentum already and it could turn back into leading without going through lagging. So I'm going to ask Tom to have a look at this one. Maybe that's giving us some potential. This one dropping out of leading, not yet for the time being. No, not Netflix, not for the time being. FITB, I know it's Tom's first choice. I'm not very excited about it from an RRG point of view. It is on the right-hand side. It's a short tail, but let's see what he has to say about it. Voya could be an interesting one. We've looked at this, I think we looked at it last week when we did the RRG segment on Thursday, and Voya was one of the stocks that we liked. So it seems to have picked up. That's nice. So let's have another look at Voya. Could be a gutsy one, Walmart. It's turning up. CMCM, CVNA. I would do CMCM and CVNA are potential interesting ones as well. This one, no. This one, no. And now we have done. So let's quickly switch to the weeklies. Let's see if we can get any more information from that chart. So CVNA, yeah, like it because it's still there. On the daily, it was a good one. HBR, yes, certainly. RH. That one. That one did not come out on the daily, but it looks very good on the weekly. So I'd have probably, we don't have time to go into that, but I definitely look at that chart. Kai, no, it's one that you might want to look at if you're a longer term investor. It didn't come up on my dailies. OCs, no. RC is the one that I picked up on the daily and it's moving in the right direction on the weekly. So that's cool. This one rolling over, not like Netflix, no, too strong. Very strong trends. Probably gonna curl around, but it's too early right now. I would pick this. I would look at Netflix when it starts to go higher on the momentum axis as well, while still in weakening. That's when I start to become interested again in Netflix. NOG looks interesting. Didn't pull it up on the daily, but on the weekly, it's definitely one that I would have a look at. AAP, now Voya, nice one. It's still here. It's turning up. It's turning up on the daily. So yes, we're going to look at that. CZZ, no. FITB, same position as on the daily, so potentially interesting. Curavio, no. Cool. What's happening here? So this is where you, for example, what you want to do here is zoom in and see what's happening there. Got it there. It's probably, yeah, look at that. It's making this very sharp turn. Coming in there, turning back up. And that's the one that we liked on the daily as well. So that's good. That's good news. PRGS, no. Yeah. Walmart. CMCM turning back up. That was one that was on the daily, kind of maybe. So maybe that one. Disney, not enough power behind that. I don't like the fact that the tail is so short. If it starts to lengthen the distances, then it becomes interesting. Right now, it's just a very stable performer, a little bit underperforming the S&P. IBM, not very good on the weekly. It came up nicely on the dailies, but I don't like it on the weekly. Scratch IBM. Amgen, same. Not too good on the. Looks good on the daily. Maybe it turns around. So here we are. Okay, Tom. I am going to go into my scan. And I am going to give you the symbols. You right with me?
I'm ready.
Okay, here you go. So FITB, that was your pick.
Yep.
And then number 2 is COPX.
Okay.
Number 3 is RRC. Number 4 is HBR.
Okay.
Number 5 is Amgen, AMGN.
Yep.
Number 6 is Voya.
Okay.
Number 7 is FCX.
Okay.
Number 8 is CZZ.
Got it.
Number 9 is CVNA.
Okay.
And number 10 is CMCM. I would normally spend a little bit more time on this list, but here you go. This is it. Let's see what happens.
All right. I got a question for you.
Yeah, go ahead.
Because first of all, that was great to be able to go through and watch you as you kind of went through each one of those symbols and kind of see what you liked on the daily and then also on the weekly. Because just I think the RRG is very similar to just looking at a price chart. I mean, it's always good to kind of back up, see the big picture. It was like I think it might have been Disney or IBM, one of those on the daily chart. You were kind of interested, but then when you looked at the weekly chart, you said, it really doesn't look very good. So that big picture bothers you. Now, if you were going to tell everybody out there, like if you were looking at a weekly and a daily chart, what would be what's nirvana for you?
Nirvana would be, so we're at the weekly here. Now, let's just pick 2, So, for example, Netflix and NOG. So NFLX and NOG are inside weakening, but they are on the right-hand side. So on the right-hand side of the chart are all pretty much relative uptrends. If they are in weakening, this is in an uptrend, but going through some sort of a correction. They're losing momentum. Now, just think about a relative strength line. That's not a straight line. It goes, it makes higher highs and higher lows. So when it moves from a higher high to a higher low, it's still going down a little bit. It's losing momentum. That's what you see on the RRG when it drops down. Now, clearly, if the rotational pattern continues, that's the end. But what we see in very strong trends is that a stock drops into weakening and then curls back up and comes into leading again. And that's where you make your higher low and go to push to your higher high. So Nirvana, the stuff that I really, really like is when you're in weakening, but curling back up. And Nirvana probably would be when this happens on the weekly and the daily at the same time.
Okay.
So, you know, we can quickly do that because there are such nice little tricks. If I duplicate this one here, I get the weekly, and we're looking at NFLX, and we're looking at NOG. So now we have an RRG just for these two stocks. Let's center it. So we have it there, and then I do another duplication, and I center it. And this one is my daily. I update. So now I've got my daily and my weekly. I thought everybody knew this, but apparently people didn't know how to do this. But this is really cool on a Windows machine where you can put these two. Where's the other one? Here, next to each other. So now I have my, this is my weekly, and the right-hand side is my daily. So I got NOG coming up on the weekly. So the long term, it's sort of inside the, you know, the sweet spot. It's losing a little bit on the daily, but mind you that this goes 5 times as fast. This rotation goes 5 times as fast as this one. So every observation here is 5 here. So 1, 2, 3, 4, 5. This curve here, this tail here, is the equivalent of this here, because this is just 2 days, and this is last week. So 1, 2, 3. So it's probably this piece that we're looking at. If this rotates very fast, it can pull NOG back into leading, and I would be very interested. So right now, I'd be watching NOG to drop further, and when it curls around and comes back up, that's when I'm very, very interested. What also could happen is that it curls back up here without going to weakening. It's not very likely, but it could happen, and that's when I'm getting interested. For Netflix, this is the weekly, came here. On the daily, we had the rotation, you know, on the right-hand side. Oh, whoops. So it's moving its way here, but if that can turn around, maybe a very short period here, but when it keeps closing, starts to move into the top right-hand corner at a what we call a positive heading, Netflix very, very interesting, because it will definitely pull Netflix back up to leading again inside that weakening quadrant.
Okay, I know you want to get into the scans.
Yeah, I should.
Yeah,
otherwise we're late again.
Yeah, I just want to say, though, that with Netflix, it is like consolidating right at a major level up in the 330s. So in addition to what you're doing with the RRG, you also, I'm assuming, would look at a chart. And if we're getting a breakout,
hang out. Whenever you do this, the next step is to bring it into your own workflow. So, you know, you bring up the charts that you like to look at with your indicators. If you like Aaron's work with decision point, you bring up, you know, DPO dashboards, you look at the PMO stuff. If you like Tom's work, you bring up Tom's charts. Doesn't matter. I mean, RRG will give you the big picture. It'll give you some ideas where to look at. If you're a long short trader, you can pick up some long ideas inside the improving quadrant and short ideas in the weakening quadrant, and then you put them against each other any way you like it. You know, if you're an Elliott wave analyst, you start doing your counts. If you're a trend follower, I don't care. But, you know, RRG is just giving you the big picture. I'm not calling any shots or signals from an RRG. Always do the work on a real chart.
Okay, perfect.
All right. For those of you who were in the show yesterday, I started doing a little bit of scan exercises, which I started doing for myself. And the basic reason is because I like to do that many years ago when I just started out in TA and I didn't have RRG yet. I'd like to do some swing trading and some shorter term, you know, pick up a couple of trades every month. And I ran across a book which was written by Larry Connors and Linda Reschke, which is Street Smarts. And there are many good strategies in there, but the one that I really like is Turtle Soup. I explained yesterday where the name come from, so you can watch back that show. What it basically does it looks at failed breakouts. That's what it's looking for failed breakouts around the 20-day low. Very quickly, the rules for the setup. It's a setup. It's not a trading system. It's a setup. It gives you an entry point, and you can take it into your own workflow and make your stops and your take profits and your money management as aggressive or as conservative as you like. So what we're looking for is a market that makes a new 20-day low. The lower the better. The previous 20-day low must have occurred at least 4 trading sessions earlier. Yesterday was someone in the chat box saying, so we're talking about trading days, not calendar days. Yes, we're looking at trading sessions. So it's trading days, not calendar days. 4 trading sessions earlier. So we'll have a situation where a market comes down, makes a 20-day low, bounces up at least 4 days, and then makes a new low. That's when we become interesting. When during the day the market drops below that prior 20-day low, we're going to place a buy stop 5 to 10 ticks above the previous 20-day low. That's our entry point. And that's good for the day only. If your stop is filled, then we place a good till canceled sell stop 1 tick under today's low. So it's a very aggressive stop because we're assuming that this breakout is going to fail. So we're going to bounce the other way. So if it's a valid breakout and it goes the right way, we want to get out as soon as possible because we don't want to be in front of a freight train. So when the position becomes profitable, you can use a trailing stop or any type of stop strategy that you want to do to protect your gains. Your re-entry rule, that's only on day 1 or 2. If you're stopped out on day 1 or 2, you can re-enter on a buy stop at the original entry level. On a chart, it looks like this, and I'll go to the zoom right away. This is where the market makes a new 20-day low. Then it bounces up 1, 2, 3, 4 days, and then on day 5, very briefly, we drop below that 20-day low, and during the day, we reverse back above it. So that's where we get in. A couple of ticks above 210.39. Let's say 211 or 211.5, whatever. And then you got a nice run up, a couple of days that it moves up. Wherever your trailing stop is, whether you use it here, you could ride all the way up. Probably swing traders would look to get out around 290, 220. But that's the type of trade that we're looking at. So why am I interested in these types of trades? Because RRG is trend following. And this is looking for reversal. This is trend ending. And my thought is that if I can find trend ending characteristics and I can look at where they are on the RRG, then I might be able to pick them up at a very early stage. So what my ideal situation probably would be, but we'll see if we get any of those, is when my list of possible securities plotted on an RRG starts to curl up either inside lagging or even better inside weakening. So if I have a turtle soup buy setup while on the RRG my trail is starting to curl up while in the weakening quadrant, that'll be very, very cool. What I'm looking for is the S&P 500, so that is group equals 500. What I'm looking for is a new low for the day. That's this code, low equals the min of 20 days. And that's the last condition that we're scanning for. And then we look for the prior 20-day low. And that is a situation where the 4-day low is the 20-day low. And then 1 day ago, 2 days ago, 3 days ago, so that's the days before the 4th day ago, are bigger than the 20-day low. So these 3 days, lows are higher than the low 4 days ago. And all these are ands. If that is fulfilled, then I'm interested. The problem is, and this is a thing with the scan engine, there's not really a loop while or a for then loop in the code. So what you need to do, you need to create your own loop basically. And the other thing that you want to look at is 5 days ago, because it can be 5 days ago. And then the 1, 2, 3, 4 days must be higher than the 5-day low, etc., etc., etc. at the end of your scan, and I'll give you the code in a minute, you can run it on end of day data. And what you are then looking for is a market, because you don't know whether the market has dropped below its 20-day low. So you're looking for markets that made a 20-day low close to today. And then what I did is I look for N% within that 20-day low. So you can fill in that N% to find a number of candidates. Obviously, the higher N, the more candidates you will find. If the market is open and you want to look for actual candidates that have dropped below it, you just comment out this rule here and you put in this one, which looks for the actual low and see if it is the 20-day low. Now, let me quickly, because again, we're running out of time, my God. We're going to look at the scan engine, Scan Workbench, and I have created this one here. Let's bring it to you. It's a quite a long. Well, I'll plot it in a blog, or we'll make sure that you can get it somewhere. Here is what we're doing. We're looking for that 20-day low, and you see the double brackets because we want to include the fact that it is in the S&P 500. Here we're looking for the 4-day low, and then you see the double bracket, and this is an or because it's or the 4-day or the 5th day, or so it's within the double bracket. It's and. All these have to be fulfilled, and then at the end it is or, because it can be or the 4-day or the 5th day or the 6th day. Any of those is fine. And you'll see that my list of days gets longer. So the 6th day, 1, 2, 3, 4, 5. 7-day, 1, 2, 3, 4, 6. So I did this all the way down. So this is basically in for those of you who have done a little bit of coding, this would be a loop. In the scan syntax, I've solved that problem doing it like this, making it or and just, basically manually creating my loop all the way down to 17 days, and we have minimum of 3 days, so we're looking at roughly 20 days back. And here you will see this is the line that you can use for end of day data. Now we're looking at if something is within, in this case, 3% of the 20-day low, but it didn't make a new low yet, but it gives you a good idea of something that is pushing against that 20-day low. And if the market is open, you can scan for this one here, which is looking for the actual low. Now, let's run this. I'm eating your time, Tom, on your 10 and 10. You have to forgive me. You stole my thunder yesterday.
Yeah, you're fine.
Okay, so this scan, I just ran this scan on the last intraday update. So we're looking at real-time data, but we're looking at something that is within 3% of its 20-day low. Is that right? Yeah, 3% of its 20-day low. That gives me this list. That's 32 stocks. That's not too bad. That's not too bad. So then you can, and I'm going to replace an existing chart list. I'm going to replace this one here with these stocks. So now I have my list here, and I can actually throw them at an RRG. Nice, plenty of names. Shorten the tail a little bit, because we're looking at some short-term opportunities. And then we're going to look at where we see opportunities. Well, this is live because I have not prepared this at all. I have no clue what I'm looking at. And then I will bring this up in my chart list. So my chart list is this one here. And what I will do is I will create, this is a chart style that I created where I can very nicely see the lows, and I'm going to apply this style to all the tickers in the list. So we can very quickly look at them, and I'm going to do the same. I'm going to put this one on one side, And I'm going to put the RRG on the other side. And now we can, oh, where's my chart here? Now we can play around nicely. Here you go. So let's see. Oh, that's not the right RRG. Sorry, guys. This one. HSIC. Where is that? HSIC. Well, here's a 20-day low. That's not a trade for me. It looks nice, but not great. MON. That's, you know that, Tom. Did that have some news, some takeover news or something like that?
I'm not sure. Maybe earnings. When is it? April?
Could be. Yeah, it's a pretty good chart. You know, but it's not failing at that list, you know, so it's very close to that. It's within 3%, but it's not what we're looking for. HRL, probably not. We need something that is curling. This one could be GXO. CXO. All right, this could be interesting. It needs a little bit. It needs to drop below 148, 148.12 to trigger a signal. But I like this, and you know, if it holds above this support area, then it could be interesting. So I'd be watching this to potentially pick it up around 148 if that signal is triggered. By the way, I'm using this scan to find stocks that are close to their 20-day low, potentially creating this turtle soup buy setup. But what I've learned is that it's a very good way to give me access to stocks that are trading very close to their 20-day low and turning around because they're potentially fulfilling turtle soup setups. When I combine it with RRGs, I can find powerful setups. This I don't like from an RRG point of view, so I'm not going to look at it. Neither at this one, KMI. That's better. So we didn't quite make it to that low. It's still possible because we're in the 20-day period, but you know, you can see higher highs, higher lows. This 1575 looks to be a nice support level. This could actually be a nice inverted head and shoulders pattern. So if not, you know, dropping to this support level, if it breaks above 1875, I'd definitely be interested in this one combined with that strong RRG. This is not good. This is not good. Johnson & Johnson. Have a quick look. This is close to support. I don't like the fact that it's lower high. So this is there's still selling pressure, but it could be like a spring type of situation where, you know, if we drop, and we're looking here at 121.28, if we drop during the day below 121.28, and we get back above it, let's say to 121, maybe 121.50, then you know, that would be very interesting buying opportunity, especially because it's very slowly improving on the RRG. It's improving. That could be a nice catalyst. So that's one that I have on my list to watch. ES. One thing that'll look anything good. We'll look at it quickly, but could be. It needs a little bit more relative strength, but you know, from a trading point of view, little triangle that's broken, didn't fulfill the requirements for the setup, but it could be an interesting stock. Let's see if we can find a real nice one. And then you can do your stuff, Tom.
No problem.
PHF. What's that? Ooh, that's better. That's pretty close. You know, it's 47, 46, 76. You probably can't read it on the screen, but it's 46.76. So if we, and this is the 20-day low, be careful. This is not a 20-day low. So we're looking at 46.20, 46.21. If we drop below it, get back above it within the next, I think this will be there at least for 5 more days. Anything below 46.20, getting back up above 46.25, 46.30, that's a nice buy signal. And it's improving. It's picking up a lot of momentum on the relative strength line. So this one is definitely interesting. Walmart. Hey, there was one on the, I didn't like it on the RRG. That's, somebody asked for that on the 10 and 10. I'll give it, this is a freebie. All right, here you go. This is a very nice support level around this area. Just this little drip here. So 81.49, anything below 81.49 and coming back up in the next few days, that'll be potential buy signal. It could be a very big base forming, and you can pick it up at low levels with a very short stop. It can be very aggressive. That's it.
I thought this was a really interesting segment, really explain in detail how you do a lot of this, you know, when you're looking at potential trades or investments and so forth. So I thought this was awesome. Very
Cool.
well done. Great job, Julius. Excellent.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.